Great advice. And, I wanted, because I know we talked about some of the things that I know you shared with me in terms of serving military. I want to make sure we hit some of those points, some of those key things that maybe, many of our colleagues aren't aware of. What are some of the first questions? So you have a gentleman in the military who had served in the military, walks into your office and says, Mr. Ramey, I hear great things about you. Hear that you've helped many of many of my brothers and sisters in terms of in their home ownership efforts, whether selling or buying. Where do I start? And what questions would you have for me?
That's a great segue into this. You know, with someone who presents himself as a potential client or just a potential need for some information, whether you're using your services or not, I think, again, from my perspective, you have the same response, and that is you try to get a moment to find out where are they at, meaning have they already started the initial process, have they talked to a lender? One challenge we see is a lot of people default to Navy Fed and USAA, good institutions, but they're not the best. And part of that is, and I say this very sincerely, is their intention, I think, is honorable. They're serving a lot of military folks or DOD components, civilian contractors that work on the base, or sometimes it's extended family members. You can have a grandfather who's in World War II and you can get served at USAA. Okay? Good institutions, but they may not be the best for you at that point in time. And I would offer the caveat is, if you have a lender that you feel comfortable with, or if you're working with an agent that has one, at least do a comparison analysis. If USAA is giving me a quote of X, I kind of owe it to myself to compare X with Y. I can't just take X. Because how do I know if X is good? I have no reference. If I look at X and Y, now I know something's not right here. They both come out the exact same, then I know X is as best they can do and Y is probably right there with them. I have a lender I've never met. He's also a veteran. He pays for all appraisals for veterans. He has an investor that pays for non-allowables. We try to minimize as much as we can through the people that we affiliate with to take the pressure off of not only our clients, but also the selling side. Because by law, there's a couple things that the veteran cannot pay for. They cannot pay for a termite report. Not a big deal, $75, some are free. They cannot pay for certain non-allowables, what they're deemed. That's typically, and that varies from escrow to escrow and lender to lender. They're typically sub fees of escrow, sub fees in certain title searches they can't pay for. So what you want to know in advance, if you're going to write an offer, you're going to receive an offer. Let's say you're the listing agent. Before I accept this offer, I need to know, hey, doesn't that veteran have the right or the benefit of certain non-allowables not to be paid? The buyer's agent should be saying, yeah, you're exactly right. Well, my seller doesn't want to pay for those. These need to be negotiated out during that process. Who's going to cover these fees? These are things when you talk to someone who comes in, are they aware of the fact that there's certain things they can pay for, certain things they can't? Are they aware that if they have a Purple Heart, they're active military and they have a Purple Heart, they can waive their funding fee? That's at 2.3% of the purchase price. So if you have a $500,000 home, you're already looking at almost $6,000 right there, or $5,000. I get 2.3 would be at $4,600 that they don't have to pay. I have one in right now in escrow that has a $21,000 funding fee he never submitted for his disability. The Purple Heart's one thing. A lot of people don't have Purple Hearts, but they have disabilities. And if you're rated at 10% disabled, service connected, or higher, that funding fee is waived the rest of your life.
It's huge.
You'd be surprised at how many lenders aren't aware of that. I've had to let 3 different lenders go that weren't aware of that. And if I know more about this than they do, I don't need them.
Right.
I need lenders who know the product to take care of my clients. So if I had a new person come up, have they spoken with a lender? Have they spoken with the right lender? Would they consider a second evaluation on their pre-approval? And then you just get to know them. What are their needs? At the end of the day, I focus on 2 major things in my home buying class. I used to teach this for Pacific Oaks Credit Union. I was subcontracted off the military in '98. I taught it for a couple of years. Ironically enough, I went back and worked at the same department. They used to subcontract me out. Once they found I still had my broker's license, They used me forever. I taught every home buying class for 6 years on both bases. It's been a blessing and it's been a privilege to get to know the folks who are buying homes. But what you're seeing are the reasons, not the reasons to buy, the reasons why not to buy. Big difference. We can show them reasons to buy all day long. You've got to be able to combat their rationale on why not to buy. Well, the market's going to do this. Well, the interest rates are that. Well, I don't know if I want to stay here. Well, I don't know if I can handle the payment. We get down to two primary things. What's the payment? Now, what's the sales price? And I'll do my little thing. Oh, it's Christmas time. Hey, here's your payment. Oh, kids need braces. Hey, you got to make that payment. Your wife's pregnant. Congratulations. Triplets. Oh, my goodness. Payment's still coming.
COVID-19.
I do this for a second, then I'll say that's about 15, 20 payments. How many payments you got to make? Oh, 360. Oh, okay. You want them to really absorb the payment hit, not the price. The price goes away. It's the payment. Okay. So that's the first thing. And the second most important thing is the functionality of the house, utility. Payment, and I have 4 kids. I can't buy a 2-bedroom house. The house has to fit. Work on those things as your core. Everything else revolves around that. You'll be fine. So I kind of went off a little bit on your question, but I think the best starting point is find out what they're at, what they're dealing with, their pre-approval, and just kind of let it unfold from
No, you hit a lot of great points. And I want to go back to a couple of those. Can you hear me okay? I can hear a little bit of feedback. Okay. So you touched on, well, let's just start with the funding fee. And we'll get into a little bit of that. And then the non-allowables, the one point I brought up that was new information to me going through the MRP training was that you cannot enforce a buyer broker agreement with somebody who's serving in the military. That's a huge no-no, huge no. I'm not talking about the VA no-no that you shared before, but you cannot charge a commission. So if to put it just in, regular layman's terms is if just customary, you'll see 2.5% being advertised for a commission. So it is common for a buyer broker agreement, which is a contract with a buyer and that real estate agent, to guarantee a minimum commission, whether 2.5%, 3%, whatever that commission is promised between that client and that agent. And typically it's the seller who's paying the commissions to the buyer's agent. So with military, active and retired, you cannot enforce a buyer broker agreement with your client. You cannot ask them to cover any commission difference. They can't pay you a single fee as their agent and representing them. You get paid your commission from the seller, whatever's advertised on the MLS. If it's 1%, that's what you're getting. If you try to enforce a 2.5% contract, that is what we call in contracts class avoidable contract. That is unenforceable because you cannot force or ask or try to put a military member under obligation to cover that difference. So that was huge to me that I had no idea that existed. So that was one of the non-allowables, is to pay any fee to your agent. So that was one biggie. The other, you mentioned about funding fee. And the reason why I want to emphasize funding fee, because this is so important. It's really the way for VA loans that the bank collects their money, right? You either get it up front, you get it through the interest, you get it through the mortgage insurance. Well, think about it. Little money down or no money down. The limits, and I know you were sharing with me before, there are no current limits now in terms of how high a VA buyer can go. So what I would like to finish with are reasons why you may want to do this MRP. You may want to learn a little bit more about the military. Reach out to us. Maybe we'll just do a one-on-one class with a certain group of agents. So if you're interested, just direct message me or shoot me your email if you want to keep it anonymous. My email is brandon@bhsre.com. That's Brandon at V as in Victor, veteran, H, veteran home services real estate.com. So bhsre.com. Feel free to shoot me an email so it stays anonymous, and we'd be more than happy to do a private session with you. But that funding fee is key, because as my dad talked about, 2.3% on the purchase, that's for your first purchase. Actually goes up on follow-up purchases. There's also certain rules in terms of when you can use your VA loan, right? Certain things have to happen. So just because you used it once doesn't mean that you're done for life, that you only get a one-time crack at it, but there are certain requirements of what have to happen. So I'd like for you to touch on some of that with the funding fee, and really to emphasize that important. You mentioned $4,600 on, as being a rough amount. I see a lot that are $7,000 to $10,000. You mentioned one as high as $18,000. So when you can save that, and their only requirement is minimum 10% disability, there's also steps to make sure you get your rating, because how many people do you speak to that don't have that rating? So when you can save that kind of cost, and or how many people have we talked to that have purchased and had no idea they had 10% disability, yet they were charged that funding fee?